It's the weekend and you have financial questions that need answering. That can only mean one thing. It's time for Jill on Money, the show that takes the mystery out of your finances. Here's your host, Jill Schlesinger.
Welcome. It is the holy version of the Jill on Money radio program. Okay, I don't know how holy. It's been a very strange time. You know, it's strange to think about having Passover. It's strange to think about Easter when you can't get together with your family. So I understand that. The news about the virus is always rough to take in, and I think it's almost just this constant flow. That's what's really difficult. So if you've got a financial question, especially as these uncertain times persist, send us an email. It's askjill@jillonmoney.com, askjill@jillonmoney.com. And you may have heard us talk about this previously. We are talking about it a lot because we have been getting so many requests from you, from your brethren, that we have begun podcasting daily. We used to have a podcast. We would drop a couple of episodes a week. We'd also do the radio show. Well, now we are 7 days a week, me and Mark, 7 days a week, doing this podcast called Jill on Money. It's just a way for us to answer so many of the questions that are coming in. So if you'd like to subscribe to that podcast, Jill on Money, you can get it anywhere you find your favorite podcast. Maybe you're a radio listener and you don't really know about the whole podcast thing. Well, there's all different places you can learn about it. Apple, Spotify, Stitcher, radio.com, Google Play for you Android folks. And it's very easy. It's like listening to a show on demand. It's essentially using your phone to listen to radio. So that's kind of cool. So send us your questions, subscribe to the podcast, and we'll be delighted to chat with you. And in this time, we are not doing quite as many calls. I don't know, because Mark's lazy. No, it's a little bit harder for us to do the calls. Maybe we'll try to do that in the future. So let's get to it. We've got a question from Tom, who's been listening to the podcast for some time now, and he says, I appreciate your and Mark's extra engagement with the daily entries during the coronavirus. My wife and I are 62 and still work. I believe my employment is reliable going forward. I earn about $165,000 annually. We have no mortgage, no debt, and an emergency fund of about $25,000. We have $1.5 million in retirement savings as of March 27th. It's a 50-50 allocation in Vanguard Admiral Index funds. I made 3 rebalancing trades from total bond to total stock during March. We also have, so on top of this, it looks like, on top of the $1.5 million, $420,000 in a 5-year, I think that this is an annuity that has 3 more years to go, and then will be rolled into a 5-year annuity, indexed annuity to carry us to age 70 when we will take Social Security benefits. Okay, now here's a question. Should I take action on a Roth conversion this year as the market continues to go lower? I could move $80,000 with about $20,000 in taxes. I may get my annual bonus, depending on things how work out, which would cover this cost. If not, I could use our home equity line of credit to cover the tax. In your opinion, is it reasonable to use the home equity line of credit as a last resort, keeping the emergency fund intact for safety? And if so, do you have a view on the tipping point to convert? I'm thinking at 40% off the highs. Sorry for the length and detail. I know you value more info when you give your considered opinion. Tom, why don't we wait to see if you get your bonus? I don't want to do the home equity loan. I want you to keep even if you think your employment is reliable and it's secure, I would still prefer to be kind of wimpy. Let's see how the bonus goes. Let's see how everything goes. And if you missed the chance to convert because of it and it wasn't at the rock bottom level, so be it. Who cares? Who cares? This is, one of those things where it could be a good opportunity, but at the end of the day, I don't want to take on the risk of having that home equity line of credit and being on the hook for that. I don't like that. Okay. Here's a note from Mark. How likely is our 401k stable value fund to lose value or fail? The prospectus states 97% of fund investments are in wraparound accounts, cash, guaranteed invest. Okay. It's in a top Dow 30 company. I think it's very unlikely to lose value or fail. I really do. Could it? Sure. Is that the most likely scenario? Absolutely not. I wouldn't worry about that. Okay, here's another Roth question. Lisa says that she and her husband are suggesting to their daughters who are in their 20s to open Roth IRAs. Which funds do you recommend? How much should they invest? Has a deadline for 2019 been extended? Please advise. Yes, so the tax deadline has been moved to July 2015. If I'm not mistaken, so too has the IRA funding, because it is usually you can fund your Roth or your traditional IRA as early as the first day of the year, but until your tax filing deadline. So that's the rule. The question about where to do it, just do it where they can buy some cheap index funds. Could it be a Vanguard is fine, or T. Rowe Price, or a Charles Schwab, something pretty easy like that. Your maximum contribution is $6,000 for tax year last year, 2019, and also $6,000 2020. So, good idea. Very good suggestion for the kiddos. So, congratulations. They're on their way. Hopefully, if they have questions, they should be doing this themselves. Of course, you can guide them, but it's time for them to take control. All right. Let's see. Brian writes, welcome to the San Jose Mercury. I enjoyed your first column. As a retired United pilot, it's painful to watch the financial devastation that suddenly hit my company. So the government assistance you spoke of will be welcome. Just a quick tax question, if I could ask you to put on your CPA hat for a moment. First of all, I'm not a CPA, but let me try. My annual adjusted gross income is around $180,000. I typically have about $6,000 of contributions on Schedule A. But last year, due to a change of residence with a downsizing, there was a spike in donations of house goods, furniture, appliance to $14,000, for which I have all the receipts. Do you think it would be wise to attach a Form 8275 to explain the reason for the increase, or just let it go? Just let it go. You didn't do anything wrong. You don't have to, there's no reason for you to make an explanation. If God forbid it gets flagged and they come after you, don't worry, you've got the backup. And that's what I would do. All right, you're listening to Jill on Money. If you've got a financial question, just send us an email. Ask Jill at jillonmoney.com. Hop onto our website, jillonmoney.com. We've got so much information there, lots of clips, lots of columns, and lots of great resources, links to things that you might need surrounding the coronavirus programs that are rolling out as we speak. Okay, we'll be right back.
Back to Jill on Money, where Jill Schlesinger helps you take the mystery out of your finances.
You're back. It's Jill on Money. And if you've got a financial question, we'd love to hear from you. Our email address is askjill@jillonmoney.com. And you can follow us on Twitter and Instagram and Facebook. It's so funny. Mark, somebody said to me, oh, I saw that segment that you did on Sunday morning, or this. I saw it on Facebook, and I always forget that you're posting this stuff. So thank you for that. Mark is really the best executive producer ever. And I say that I work with a lot of producers, different shows, different mediums. Mark's the best by far. All right, let's do some more questions. They are pouring in. The email inbox is crazy right now. Chris writes that he has, or she has, not sure, Chris with a K. I've worked full time since the late 70s, and I started participating in 401ks when they were invented. That would be the early 80s. Now, after 40 years, I finally made it to nearly $300,000 in my Fidelity 401k. I'm 60. I've got no plans to retire. But here's the thing, I haven't logged in, not looked at my 401k since the stock market was at its highs. Should I look at it? Should I continue to not look at it? Right? My annual income is $64,000. I've got $25,000 of cash on hand. I'm just looking for some assurance. I don't know what to say, Mark. What do you think? I feel like it's irresponsible of me to say don't look, and yet ignorance is bliss, and he doesn't need the money. So, what do you think, or she? I don't know. I feel like it's irresponsible that I should tell this person to look, but really, in this case, maybe it's okay. I don't know. Mark is voting don't look. I'm going to say don't look. And what about this? Let's do this. Why don't you look in 3 months? Why don't you look at and June 30th when it's the midpoint of the year? And if you need help, give us a holler back. How's that? I think that makes sense. Okay. All right. Okay. Here's a question from Kevin, who says, a category of worker I see excluded from the list of people is that for the, I think you're talking about I wonder if you're talking about the stimulus checks, is self-employed sole proprietor who has no employees. Is there anything being done for people like me who've been in my own business for 37 years, but I haven't had any employees for years, and now I just work by myself? Well, if you make less than $99,000, then you're fine. You're going to get a check. Now, if you're asking about the Small Business Administration, that there is some part of the program that you may be able to claim or get help from, because I think that's something. It's interesting. The small business part of this is pretty confusing, but I think you might have a shot here. You should poke around the SBA website and see that whether or not you may be able to get some help, because it should be able. They say it's for it's sole proprietors. I mean, it means that there could be some help, but you'd have to have a justification for that help. So you wouldn't be able to. I wonder if you can use it. Mark, what would you think if you could get the PPP, the Payroll Protection Plan, for yourself? I wonder if you could do that. I have to look into this. And this is the same thing. Here's another question from Roger. It's the same thing. Doesn't have any employees other than myself. Is it possible to apply for a loan to keep afloat while waiting for things to clear up? Thank you. We're going to have to look into this. I'm going to have to look and see if whether or not you can get that a small. I'll find out for both of you. Okay, because I think that's important. So same thing here. Greg is a small business LLC sole owner. He's been negatively impacted due to the virus. A lot of options for financial assistance available, but confused which way to go. Okay, I think it's the federal disaster through SBA. Then I think that's one aspect. I think you should definitely, if you have been impacted, and you should claim unemployment and through your state, and then you should also make sure as you make a claim through the state that you're also impacted by the virus, and then you should get the extra money from the federal government. So I think that it's the federal disaster relief for these small business owners, but we're gonna check it out. We're gonna see if we can help you out. All right, let's see. What else do we have here? Okay, this is from Steve. He lives in California, and he saw my article in the East Bay Times. He says, how will the IRS determine whether to use the adjusted gross income from 2018 or 2019? And he says, I normally mail my return around April 14th or 15th. Now the due date is July 15th. It's important to me because if they use my 2019 return, I won't receive anything. If I use my 2018 return, I'll receive the 300 or 400 max. 300 or 400 max. Is this for the, so the AGI is for the stimulus check. So this is would be for the 1,200 or the 20, right? Or for the 2,400. Okay, I got you. Okay. So here's the thing. If you're being phased out, I understand that. So if you file and you get the money, and then 2019, you actually find that your income is way up and it precludes you from qualifying, what would happen is they'd make an adjustment next year at tax time. So that is how it would work. It kind of depends on whether or not you really need the money or not, or whether you think it's really worth it to get this money, or whether it's more of a pain in the neck and an accounting issue. Sometimes for a few $100, especially if you're still working and things are okay, it may not be the wisest thing, because then it's just a pain. Okay. Here's a question from Brett. When I filed my 2018 return, I used a checking account that no longer exists for the deposit. It was with Vanguard. They terminated the service. I checked with Vanguard. They said that the attempt to deposit the check will bounce and they will have no knowledge of it. That's what I expected. What will the government do when this happens? I hope they would then mail the check using the address on my return, which is still correct. Can you confirm that for me, please? I can't find this right here on the website, but I think if you go to the irs.gov on the coronavirus, it's probably there. I think what's going to happen is it's going to be a pain in the neck because you're going to get a paper check, but that is going to be a lengthy process. And in fact, I understand that this could be up to 3, maybe 4 months. It's unbelievable to imagine that, but we don't print a lot of checks from the United States Treasury. So the IRS does plan to prioritize payments for individuals who have incomes of less than $10,000. They're going to go out in tranches. So 10, 20, 30, 40, like that. And they're going to try to issue about 5 million checks a week. And so anyone else that if you want to know, it looks like they don't have your information or it gets bounced back, it looks like you're going to get a paper check, but you won't get it for a while. Okay, this is from Larry. I am retired, so my income is fixed except for inflation increases for the next few years. In order to reduce federal income taxes on my IRA rollovers to my Roth, should I start rolling small amounts to my Roth each year or wait until later to do larger rollovers? Thanks for your great Chicago Tribune articles. Larry, I like to do small amounts so that you stay, or let's just do the amount that, number one, where you can roll that amount in, pay the tax out of your non-retirement assets, and stay within the same tax bracket. How about that? So I'm hopeful that your highest tax bracket is the 12%. So if you can stay within that, I think you're in pretty good shape. Otherwise, the only reason to do it all at once is if there's a teeny tiny amount and you can pay all of this tax due. So not a huge change one way or the other, but at least you could kind of limit the tax hit and again, try to remain in your lowest tax bracket possible. That's what we're trying to do. Okay, that's it. Yet another segment in the CAM. It's Jill on Money. And if you'd like, during the break, go to the website, jillonmoney.com. And there you can read about all the stuff that we've been talking about. But you can also hit the resource tab and you'll see a lot of information. We've got the link to the New York Times FAQ on the coronavirus bill. So that's a very good thing to have. All right, when we return, more of your questions. We'll be right back.
Do I invest here? Should I put my money there? Jill Schlesinger can help you. Back to Jill on Money.
You're back. It's Jill on Money. And we are here answering your questions. Most of these are about the coronavirus impact on your financial life, some of the programs that are being rolled out by the government, and anything else and everything else in between. So if you do have a question, just shoot us an email. Ask Jill at jillonmoney.com. Ask Jill at jillonmoney.com. Marilyn writes that she has a home that she rents out. The tenant has been laid off and cannot pay her rent due to the COVID-19 pandemic. I called my mortgage holder on that house, Wells Fargo, and they told me they are not charging any late fees if homeowners cannot pay their mortgages. My follow up question to her was, if I am late over the 30 days and still do not have the money to pay the mortgage, will Wells Fargo be reporting my late payments to the credit bureau? She said the bank has shareholders. They decide on the credit bureau reporting. Nothing has been decided about credit bureau reporting on late payments. What do you think will happen? I think they're not going to report it. I think that there's already this. She sent the message on March 30th, but already the banks are starting to basically say, we're not reporting. You're not going to get in trouble. So that's not something I would worry about, really. Not worried. Okay, Carol writes that I am self employed and do festivals all year long selling custom leather harnesses and clothing I make for dogs. Ooh, I'd like to know that person. Anyway, she's already had tons of cancellations. So, do I qualify for unemployment insurance? Yes, you do. Absolutely. You absolutely qualify. That's the group that would have normally been left out. Anyone who's self employed, yes, apply through the state and you will get it. Okay. Here's another unemployment question. A number of my daughter's friends are being furloughed but not laid off. Are they eligible for New York State unemployment benefits? Yes. Furloughed, laid off, whatever you want, you are all going to be eligible. And that's good news. All right. A couple of stock market questions. For stocks to go down, they must be sold faster than they are being purchased. When stocks are sold, there is a check issued for the amount of the sale minus selling charges. Where is all the money going? Banks haven't seen a sharp rise. Commodities aren't seeing a sharp rise. Where is the money going? Where is it going? Guess where it's going? It's going to cash and it's going to short term treasuries. That's where it's going. When people freak out, they fly to safety. Yeah, there's some money that's gone into gold, and there's some money that's gone into some other assets. But the most important and the most important repository of the sales proceeds are, of course, short-term treasuries. That's when you know people are really freaked out. That's where they go. They run to safety. Um, and so Richard writes, how does the stock market go up with so many businesses closing and people out of work? Who knows? Mark and I just, we always ask about this. Sometimes it's wishful thinking. Sometimes the stock market is ahead of the actual economy. But I would be somewhat skeptical that the worst is all behind us. Maybe it is. Maybe it is. But in most bear markets, there's a retest of the lows. So I wouldn't count on anything with that. All right. John writes, thanks for the great reporting on CBS. I've been wondering why credit card companies have not lowered interest rates during this troubling time. I used that question to a friend inside the industry. Their response was companies are in a protective mode due to rampant increase in fraudulent activity. Okay, that's baloney. That's complete baloney. It's not about fraudulent activity. What I think is that they don't have to. And so, yes, they're giving breaks. They're giving forbearance. If you owe money on your credit card bill and you have been impacted by the coronavirus, you absolutely should make sure you ask for help. Okay. That's imperative. Now, that said, you're not going to see the credit card companies drop their rates anytime soon. They'll go down a little bit. It's just not going to be what you would like to think about during these hard times. Jean writes that her grandson is supposed to graduate in May. At least he was before the virus. I have a 529 college fund for him. How can I save as much as possible for his future? Well, what do you mean? Is he going to go to grad school? And do you mean that he's not going to graduate? This is very curious. 529 is a fantastic vehicle if he's going to use the money, but if he's not going to use the money and this is just extra money, you could pull it out. It might be worth it for you to see whether he does go to grad school. And if he has a sibling, you could, of course, shift the money among the siblings. So that's something to think about. Here is a question from Anne who would like to know, let's see, is an LLC general contractor with only a 1099 subcontractor able to apply for unemployment under the CARES Act? Yes. Yes, this is the most okay, so let's look at this. Let's say that Mark is a 1099 employee of mine, and let's say that we no longer have any advertising revenue. We stop the show. We both have no money. We can both apply for unemployment insurance. That's the rule. And that is the change of the CARES Act. It expanded eligibility for everybody. So this is incredibly important that you really make the way you make the mistake is you err on the side of apply, apply, apply. And by the way, it's going to take a while. So really apply. Okay. Here's a question from Dean who says, I heard you answer a question on the Monday, March 30th show. My God, does that seem like 100 years ago? From someone who's nearing retirement. Dean says, I'm in the same boat. When the 2008 financial crisis hit, I saw how it hurt people nearing retirement. I made a mental note that when I was 3 or 4 years from retirement, I would shift 20% of my funds to an extremely conservative portfolio, mostly cash, and allocate the rest to what would be considered aggressive for my age. As the market made dramatic gains in recent years, I would lament that my 20% was not along for the ride. But now I'm relieved because it has held steady. And the 80%, of course, has not held steady, but I won't need to touch it for a while. Sounds like a good approach to me. I wonder if you agree and if others should consider the same in the future as they near retirement. Absolutely. I think that the amount of risk that you can absorb and you can really take is so different when you know you're so close to needing your money. And this is why I think it's imperative that people really pay attention to that as they are approaching retirement. So good for you, Dean. Congratulations. I think 80 is actually more risk than I would have, but I'm a wimp. So that's just me. Okay, it's time for a break. It's Jill on Money. Hop onto the website, jillonmoney.com, and there you can sign up for our free weekly newsletter. It comes out on Fridays. Kind of cool. Gets you ready for our weekend show. All right, we'll be right back.
(401ks, IRAs, refinancing, she covers it all. Back to Jill on Money with Jill Schlesinger.
You're back. It's Jill on Money. If you've got a financial question, we'd love to hear from you. So easy. Just send us an email. Ask Jill at jillonmoney.com. Mark and I are just sitting around eating bonbons all day. No, we're not. We're both working so hard. But you know, it really is such a privilege to be able to work. Imagine like complaining to somebody, oh, I'm working so hard. And the person listening to you is like, oh, really? I don't have a job. So we understand that. So we understand that we are very fortunate in this time. And it is a tough time. We get it. And we are here to help you. So the easiest thing to do is to give us a shout, send us an email with your financial questions, because if you're sitting on top of that, it's not good for you. If we can help relieve that, oh man, that's worth everything to us. Okay? All right. Now, here's a question. This is from Nathan, who says, thank you for your podcast. I've been an on and off listener the last few years, but I'm listening daily now to your updates and great advice to everyone. I really appreciate your no nonsense, keep it simple, stupid approach. I have a steady income that is thankfully secure during the pandemic. My partner is a freelance videographer and is taking an income hit, though she's finding creative ways to make money. We're married filing jointly. Due to her business, we pay quarterly estimated taxes. And the last few years, we've owed money when filing. Here's my question that I can't seem to find a clear answer to. Okay, our 2019 income qualifies us for the 2400 stimulus check. The terminology being used for these checks defines it as a credit against our 2020 tax return. So since we may owe money next April anyway, it sounds like we will owe an additional $2,400. Am I understanding this correctly? If this is the case, the stimulus is basically a short-term, no-interest loan. Nathan, I had the same question in my mind. I have to tell you, I really don't quite get it, because as soon as they started saying it's a tax credit, but then they said it's a refundable tax credit, meaning that even if you didn't have enough income, you just get to keep the money, like the earned income tax credit. And I haven't really understood what this means. So here's what I think. I think you're right. I think that if you get the check this year and then you make way more money in next year when you file, right? I think you are going to basically have to give that money back. That's how I understand it. They keep saying an adjustment will be made, but that's really what it is. So if it is, it's a short term, no interest loan if you have this strange situation where your income's going to bounce back. So, what I would think is a smart way to manage the process would be to actually take the money, but don't make sure you don't spend it. You really want to make sure you have the money available, right? That would be, I think, that's probably pretty smart. That's a good way to approach it. So, yes, that's my understanding as well. I think it is, let me say, the very official way to think about it. I think it's a little fakaked. I don't think they really explained it so well. But I think it's a sliver of people who are involved in the way that you are. So maybe they want to spend a lot of time on that. Okay. So Alan writes, I always enjoy listening to your reports on CBS. I have a question. A company like Sears or Kmart that was having issues before the pandemic, what are the chances that they totally collapse? Oh, Alan, this is a question that's been plaguing me. I'm very worried about retailers. I really am. I have been very concerned that, if you think about it, these are companies that last year in 2019, when there was a decent economy, they closed 9,300 stores. Okay. And they also, not only that, there were 23 retail bankruptcies. And so when you think about that, that was a good year. And now we're worried about a year that's actually not very good. It's going to be a horrible year. So I think you're right. I think that there are going to be some winners and losers. And I think some in the retail sector may not come out of this strong. I think the particular ones at risk could be those that are carrying a lot of debt. So that's what I would think. Christy writes that she wanted to share this. She's self employed in Florida. She called Bank of America 2 weeks ago trying to be proactive, knowing I'm going to lose business because of the unforeseen future. One, I've been a customer for 24 years. Two, never missed a payment or late. Three, I've got $15,000 available in credit. I asked if I could postpone a month's payment, asked if they could lower my interest rate. I was passed off to other departments. I was told they couldn't do anything until I missed payments. It was disappointing, as you can imagine. I failed to mention this. I called only because I received an email from B of A stating that they are here during these uncertain times. Thank you for listening and stay safe. This makes me insane, Christy. I think that they probably are a little bit more serious about it right now. So I'm hopeful that if you were to call back and ask for some forbearance, that they would comply. And I really do. I think that it may have been like a little bit early in the process. And as a result, that could be one of the reasons that you might get a different response today. Look, gang, the banks are trying to actually function and be responsible. The government's trying to help, but there are so many snafus along the way. I ask that if you run into a roadblock, don't just take no. Try again. Keep trying again, keep trying again. And if you can't get onto a website, same thing. Keep trying, keep trying, keep trying. Same thing with your unemployment benefits. If you cannot log on, if you're getting bounced out, keep trying. Stay at this. This is a squeaky wheel for sure, okay? You are listening to Jill on Money. When we return, let's finish up the hour. We'll do another question or two. And when we're on the break, why don't you just hop onto our website, jillonmoney.com. We'll be right back. You're back. It's Jill on Money. And if you've got a financial question, we'd love to hear from you. Our email address, askjill@jillonmoney.com. That's askjill@jillonmoney.com. Joe writes that he recently discovered the podcast by recommendation from the folks at Planet Money. Oh, how nice. I love my friends there. Thank you, Stacy. I very much appreciate what you're doing for all of us in these uncertain times. Here's the deal. I'm 62, very recently retired. I today have about $800,000 in my 401k IRA, split between the conservative Vanguard Wellesley Fund, 80%, and a Fidelity Target Date Fund 2020. I have enough cash and other income for the next couple of years. I don't plan on using any of it for the next 18 to 20 months. Great. Doesn't plan on tapping Social Security till full retirement age. I'm selling my primary residence next month. I'm moving in with my partner. The proceeds after tax should be about 600 grand. My partner and I plan on buying a retirement condo together. The timing could be anywhere from 6 to 18 months, but given all of these issues, I want to park the cash somewhere ultra conservative. I originally thought to leave it in my savings account. But the rate isn't ready for this 0.06%. I'm thinking one of these options. Vanguard, which is short-term bond fund, government securities, a CD, but I want the flexibility to withdraw at any time. One of the banks from the site you recommended, depositaccounts.com. I don't know why, but I have some hesitation in depositing in a bank that I've never used. At this point, I'd be happy with a steady 0.5% return. Any recommendation out of these three or other suggestions? For planning purposes, what is a rate you think I could expect from these choices? I mean, it changes every day. I would just say I wouldn't worry about depositaccounts.com. I mean, I would go with, one of the banks that is the sponsor of my podcast. Goldman Sachs has a bank called Marcus. If the Capital One banks, any of these banks online, they have FDIC insurance. Don't worry about it. That's the way I would go. All right, that's it. That's hour number one. If you've got a financial question, send us an email. Ask Jill at jillonmoney.com. We'll be right back.
It's the weekend, and that can only mean one thing. You're listening to Jill on Money, the show that takes the mystery out of your finances. Here's your host, Jill Schlesinger.
Welcome, welcome. It's hour number 2 of the Jill on Money program. It is should normally be a pretty exciting weekend where you've had sort of smack dab in the middle of Passover, you've got Easter, and now we have a lot of virtual celebrations. And so I wish everyone well. I know these are very difficult times for folks. So we're here to try to take the mystery out of your financial life. Everything else is so up in the air, and we know that. And so if you've got a financial question, just give us a holler, because we are broadcasting from the Policy Genius Studios. That's right, the virtual version of the Policy Genius Studios. Mark and I are about 100 miles away from each other, I think. I think that I said 200 a couple weeks ago, but actually it's 100. Anyway, Policy Genius, it's the easy way to compare and buy insurance. You can go to policygenius.com. If you do have a financial question, we sure would like to hear from you. Our email address is askjill@jillonmoney.com. That's askjill@jillonmoney.com. A friend of mine called me during the week and said she was wondering about the tax filing deadline. And I just wanted to remind everybody that federal income tax filing and payment deadlines have been extended to July 15th. And early on, it was not clear that all the states were on board. So I would encourage everyone to go to your state website. Like if you live in New York, you would go to tax.ny.gov. And there I see that New York is following along with the federal government, as every state will do. So it's a little bit tricky, though, because your tax filing and payment deadline has been extended to July 15th. But if you had to do quarterly estimates, then the quarterly estimates are actually for the second quarter are still due June 15th. That's so weird, isn't it? I feel like they should just say everything is July 15th. It's too confusing for me. But anyway, that's what's going on there. All right, let's go and take some of your emails because we have really endeavored to try to empty out our email box. That is futile, but we're going to plow through it because I know so many of you have questions. So, this is a question from Jeremy, who's a longtime listener from Buffalo on WBEN. And Jeremy says, I am 42, my husband is 46. We have an E Trade account that we started for penny stocks. Oh, come on. We'd like to take the $400 or so in there and do something small that would start earning us something. I have no idea about mutual funds, but my father, who is a money manager, made a suggestion of looking into something like the Fidelity Technology Fund. And then he gives me the symbol. Your thoughts? Like I said, I had no idea how mutual funds work. Isn't it funny to think about somebody who's trading penny stocks but doesn't understand mutual funds? It seems like a bit bass backwards, as we would say. So here's the deal: a stock, an individual security, trades throughout the day, and you can make a trade and things go well or poorly and you get in and out of it. A mutual fund is essentially an investment company set up to buy a pool of different kinds of assets. So maybe it's stocks, maybe in the case of this particular fund it's technology stocks, but it could be bonds, it could be commodity companies, it could be cash assets or government securities, could be a lot of different things. I think for your first $400, I would actually say there's no need for you to actually buy a technology fund. And I think your father in law, who is a money manager, maybe should have given you slightly better advice and say just start broad. Go to Vanguard, or you could stay at E Trade and see what kind of index funds they have. But a big, broad stock index, that's where I always start because to me, that'll give you the greatest exposure. You don't have to be a genius. You can just say, whatever the market does, that's what I do. And I hope that helps. Certainly, if you don't want to move the account, I'm sure that you can buy something in that E Trade account. All right. Okay, this is from Judy, who said her husband retired from the Navy and he receives a monthly retirement check. We had our tax withholding on his check set at single, but I always had to pay federal income tax at the end of the year. So we upped the amount of the deduction, but still had to pay. Just recently, we changed his withholding to married and also having extra with help from his check. What's the best way for us to keep from having to pay income tax at the end of the year? Well, I mean, it's just changing the withholding. That is the best way to do it. And just make sure you don't go too crazy. I mean, if you owe a little bit of money, it doesn't seem to me a big problem. So I certainly, I think it'd be wise to change that. But as I said, no, not going crazy. Okay, this is a follow-up question, which was to millennials who had no debt, 26 years old, and wanted to buy a house on combined income of $95,000. And so Rachel followed up and said, the reason we want to buy a house is because we're staying in Madison, Wisconsin for the long term. It's great for us. It has a great job market. It's an hour from both of our families. If we did buy a house or a condo, we would want to have at least 20% down payment. Would you support us buying a house if we could save the 20% down payment while still contributing 15% to retirement? You could probably talk us out of buying a house in the short term, but what timing would you suggest for buying a house? Okay, Rachel, then I am on board. If you say it's 20% and you continue to save for retirement, yes, I'm on board. Buy a house, invite us to the home, the beautiful home warming party, and we'll be happy to accommodate you. All right. Okay. Michael writes that he listens to us on KDKA in Pittsburgh. And he says, you bring the voice of calm and common sense to this world. And I thank you for that. That's nice. Michael writes, I have all of my ducks in a row, so to speak, concerning my 401k, IRA, and defined pension plan. My question is this: I'm retiring on June 1st this year. I have $7,600 in my company sponsored HSA account. Should I close the account or let the money ride for when we need it, even though there's a $2 monthly account fee once the balance drops below $5,000? If I close the account and put the money in my checking account, there will be a tax bill that's due. Yes, that's correct. Keep the account. You're going to need this. I mean, if you're retiring, you're going to have unreimbursed health expenses. This is the beauty of the HSA. If you use it for health expenses even after you retire, then you are basically getting a great benefit. It's like a Roth IRA for your healthcare expenses, for your unreimbursed ones. So I say keep it. And, I'm sure there's going to be, unfortunately, a moment in time where you're going to need that money. And it's probably not going below 5,000 anytime soon. Okay. Okay. Deb writes, I own an LLC business for which I'm the sole employee. I don't pay myself via payroll. I have my income and expenses clearly delineated. Can I still take advantage of the Paycheck Protection Program? I got to do some work on this one, Deb. I'm going to look this up during the break. And when I come back, we're going to give you the answer because that's a very common question we've been getting. And so I want to make sure we get it right. So let me check that out. And when we come back, we will answer the question around sole proprietors and LLCs. You're listening to Jill on Money. During our break, while I'm researching that, why don't you hop onto the website, jillonmoney.com. You'll see all sorts of stuff there. Check out the resource section. Very helpful. Okay, we'll be right back.
Back to Jill on Money, where Jill Schlesinger helps you take the mystery out of your finances.
You're back. It's Jill on Money. If you've got a question, maybe it is a question because you're a small business owner, maybe you have a question about your unemployment or any of the above, all of the above, or maybe it's your investments or your taxes, give us a holler. Ask Jill at jillonmoney.com is our email address, and we would love to hear from you. Before we went to the break, Deb from Madison, Wisconsin, two Madison, Wisconsins in a row, Mark, asked about being a sole employee and applying for the Paycheck Protection Program. I had to look this up because it's very confusing. So here's what we think you have available, okay? There are essentially two big programs. One is called the Payroll Protection Program, and that PPP, that's interesting because from the perspective of somebody who's got employees, it allows you to borrow money and then it's 100% forgivable if it's used for its intended purpose. The other loan includes a component that's intended to be forgivable. But anyway, here we go. Sole proprietors, it looks like everything mentioned in the PPP is good for sole proprietors, even if you don't formally pay yourself through payroll. So yes, PPP for you. If you are a venture capital backed company, there are actually limitations for you, which seems kind of smart, right? So here's the thing. I want to go through this a little bit. The Paycheck Protection Program gives you a loan of up to, which can be 100% forgivable if you cover short-term payroll obligations and other approved expenses. And you have to go through these designated commercial lenders. This is guaranteed by the Small Business Association. And essentially, it's sort of meant to say, if you bring all these people back on your payroll, right, then you will, and you keep them there for the next, 2 months, then the loan is forgivable, which is kind of great, right? Now, the thing is that you can only borrow the payroll amounts up to $100,000. So if you pay yourself a ton of money, no, it's only getting 100,000. Okay. Now let's see the loan proceeds for other things besides payroll, rent, utilities, existing debt. Okay. And it's 8 weeks following the date of the loan, provided that 75% of such expenses are used to fund payroll costs. And then you don't have to pay anything about it. And you don't even have to pay any tax on the forgivable amount. So that's really good. Okay. So extraordinarily important. You go to an SBA approved lender, start with the bank that you do business with. That's really important. And then the other part is something called the Economic Injury Disaster Loan. And it's the second component of the CARES Act that is also aimed at small businesses. It allows you to borrow up to $2 million at an interest rate not to exceed 3.75%. And you have to actually guarantee that personally. And you are going to have to put up collateral if the loan exceeds $25,000. So that's something to even think about if you have some money to put up. Okay, I hope that clarifies. I got to write about this, Mark, right? So I think I'm going to have to write a whole article about the small business aspects and try to dig into that. That could be a rest of the weekend kind of fun adventure for me. Oh, this is how I learned about it, guys. I respond to your questions and then I figure out what it means, okay? Sonia writes, is there monetary relief for college students? And I have a dependent that I claim, a 19-year-old son who attends college, but home due to COVID-19. While I will get a relief check, it appears I won't get anything for him. Can he get any relief on his own? No, he can't. This is a bit of a donut hole because if you're under the age of 17, yes, you get the $500 check for your kids. If you claim your kid as a dependent, you don't get the $500 and he can't get the money because he too he's being claimed, which is a kind of raw deal, especially for the kids who are working their way through college. I feel like that's a pretty huge oversight, don't you, Mark? That seemed like that was a big miss on, at least as I see it. Okay, here is a note from Roy. And he said, would it be wise to withdraw 10 to 15% to buy common stocks while the money market is down? He's asking, withdraw. He's asking if if he can withdraw 10 or 15% of his IRA and buy stocks while the market is down because he can't move his money around right now. It just keeps up with the market, never making money. Well, Roy, I think we have a bigger problem. What the heck is inside of that retirement account? So no, don't withdraw it because then you have to pay tax on it. And then let's figure out how to actually make it a smarter way to invest. Wouldn't that be smarter? Yeah. Let's do it. Let's be a little bit more proactive with that. Okay, here is a question from Joe. He was laid off from work since November of 2019. Had a couple of interviews, no offers. Obviously, with the virus, it's getting very hard to get interviews. Is there a way to get an extension from California in my case? It's clear that I haven't been impacted by COVID-19 directly, but indirectly, I have. Yes, there is. Okay, so yes, because you should be able to get the extension that the federal government will tack on, and I think you should try, you have to still go through California, and then basically put your case out there because I think that would be a very smart thing for you to do. And it's again, guys, I feel like all of these programs that we just explained, the small business, the idea of getting through the unemployment fiasco, which I did with a friend of mine who was also applying. It's just, a lot of the words are very confusing. The phrasing of how they're asking about what wages are, where you got money, how long you were, it's awfully difficult. So get a friend, like someone like me or Mark, who's willing to sit down with you on the phone and walk you through it. And it is very easy to get discouraged. Absolutely. We don't want you to leave this money on the table. Truly, there are some really great programs that are available. And I encourage you not to get discouraged because we want you to get that money and have this lifeline. Okay? Okay. Yamin says, I listen to your podcast every day on my commute. Thank you for your wisdom, your patience, and your financial advice. I did a rookie mistake. I bought mutual funds in a taxable account a year ago in my attempt to, quote, experience the market. I originally planned to keep those funds until retirement. Now that I'm afraid that I have to pay high tax every year until then, I'm debating the following. Should I sell the funds to harvest tax losses, keep as long as I can, move to retirement accounts if possible, since I only have $40,000? I'm 36 years old, single. My gross income, $80,000, no debt. So here's what I would do. Yeah, I would sell these things immediately. I'd have my tax loss, which is great. sell all of them. And then what you should do is at the very least, try to increase the amount of money you're putting into retirement to the maximum that you can. If you get to your maximum, then consider a Roth IRA for the rest of it. And that's it. Yeah, that was a rookie mistake. Don't worry. And keep these tax losses. You're going to want these tax losses. Remember, you can deduct tax losses against any gains. Then you can also claim $3,000 of those losses against ordinary income, and you can carry those losses forward in the future. So they can help you going forward. And that was a rookie mistake. So let's see what you got in your retirement account, and hopefully we can direct you. You can always follow up and let us know what a retirement vehicle is available to you, and we can try to guide you the best way forward. Okay, there's a segment. You're listening to Jill on Money. During the break, here's a great idea. Go to the website, jillonmoney.com, and start poking around. Go click on the Listen tab. You'll see that we now have a daily podcast. It's called Jill on Money. You can get it on our website, on Apple, Spotify, Stitcher, radio.com, Google Play, anywhere else you find your favorite podcasts. Check it out. We're doing similar things on the podcast as we're doing here right now, holding your hand, lifting you up. It's Jill on Money. We'll be right back.
Do I invest here? Should I put my money there? Jill Schlesinger can help you. Back to Jill on Money.
You're back. It's Jill on Money. If you've got a financial question, we sure would like to hear from you. Our email address is askjill@jillonmoney.com. It's a good place to go, right? And if you're on the website poking around, we also have a contact button on the website directly. So it's in the upper right corner. You'll see it there. Okay, Cesar writes, longtime listener and currently reading your book. It's great having people like you giving us advice. My question is simple, but I'd like to give you some context. I was born in the United States, but all my life I've lived abroad, Madrid, Spain. 4 years ago, I decided to come back after getting divorced and started from scratch here in Seattle. As you can imagine, I grew up with a very different mentality about retirement. For me, it was getting to 65 and retiring without worrying. But being here, of course, everything has changed. Now I hear a lot about 401ks and IRAs. And honestly, for someone like me, it's a lot. It's a little bit confusing. I get that here, retirement is my responsibility, but where to start? How? Okay, well, let's walk you through it, Cesar. I'm 36. I make about $70,000 a year. I have almost $20,000 in a Marcus savings account. I have $2,000 in credit card debt. I got a personal loan to lower the interest. I have around a $14,000 balance left in a car loan. Other than that, I'm debt free. My employer offers 401k benefits, but I haven't put any money in it yet. What's the best plan to get started on my retirement? I would like to eventually go back to Spain after retiring here. Thanks again and stay safe. Okay, well, a couple of things. You've got this 20 grand in a Marcus savings account. So let's just put $2,000 and pay down your credit card debt. Let's just get done with that. Pay that down. And you don't have to pay down the car loan right this second. That's fine, but pay down the credit card debt. And then what you should do is start contributing to your 401k and start by putting in, say, 6% of your salary. And hopefully that will allow you to start participating and also will allow you to get used to that feeling. And hopefully, I keep saying hopefully, you also get a match from your employer. So that's where we start. You start with a 401k because it happens automatically for you. So start there. And if you'd like, you can always follow up with us and send us the various options for the investments inside. Normally, I would just say if you're 36 years old, you can pick a target date fund that targets, say, the year when you turn 65 or 70. And that's really important. Okay? Ed writes, I listened to you a few times on the radio and have finally subscribed to your newsletter. I'm retired, 68 years old, and divorced man that's blessed to be able to live comfortably. He's got Social Security and pensions. I have my pre-tax savings account I don't really touch with Morgan Stanley. I believe I heard you on your program to be sure that we invest our money only with a fiduciary advisor. From the small amount of research I've done, I'm not finding that Morgan Stanley can be considered this type of organization. Can you give me your opinion? And if they are not what I'm looking for, what are the suggestions? Okay, now here's the thing about a place like Morgan Stanley or Merrill Lynch or Wells Fargo or any of these advisors. As firms, they will not say that they adhere to the fiduciary standard, which means they've got to put your interests first at all times. They don't do that. But individuals in these firms can be held to the fiduciary standard simply by the designations that they carry. So let me explain that. Let's say your Morgan Stanley broker has the letters CFP after her name. So she's an advisor with Morgan Stanley, and she's also a certified financial planner. In that case, she will be held to the standard of putting you first. If the person that you are working with at Morgan Stanley is not a fiduciary, doesn't mean you fire this person immediately, because we don't really know, I don't really know what he or she is doing for you. So if the person is giving you financial advice, I would like it to be a fiduciary. But if it's somebody where how could I make the case for non-fiduciary? Well, let's say that you inherited a stock account or you just have a money market account with this person. That person is not actually giving you advice. So maybe in that case, I would say, who cares? It doesn't really matter. But once the person who's holding, who is, talking to you about your money is offering advice or giving you suggestions about products to buy, that's when I think a fiduciary is incredibly important. So if you want to make sure that your advisor is a fiduciary, you go to NAPFA.org. That's the National Association of Personal Financial Advisors. You can go to the CFP website, letsmakeaplan.org. You can work with someone who is a CPA who's got a designation called PFS. And if you work with any of the online wealth management firms or sometimes called robo-advisors, they are also fiduciaries. So that might mean Vanguard Personal Service Advisor, Schwab Intelligent Portfolio, Betterment, Wealthfront, and a company that you may have heard us talk about here called Facet Wealth. The most important way to sort of unravel the fiduciary conversation, just to think about it, is to say, like, if I went to the doctor right now, I would want that doctor to tell me what is in my best interest, not the course of action that's going to make that doctor more money than the other course of action. So think of it that way. And you just ask the question of the person, okay? All right. Lara writes that she loves the show and she's been listening religiously every morning, meaning the podcast, because that's daily now. And Lara, too, is considering hiring a financial advisor for retirement planning, and she started shopping around. She says, the largest share of my retirement assets are in a 401k at Fidelity. I put everything in a target account that aligns with my age. I'm 47, still a ways from retirement. The first advisor I talked with said my account was being managed as if I were 30. He also said his total fees would be less than I'm paying for Fidelity funds. I can't tell if he just wants my business or if I should listen. It seems those target funds should be designed to my age. I'm torn whether to stay the course or go with an independent advisor. Any advice would be appreciated. So what I think is, I'm going to come back from the break and talk about this. I want to spend a little bit more time on this question. And when we come back, we will talk a little bit about when do you need an advisor, when do you not, and what are the choices. Let's dive into that a little bit. It's Jill on Money, and our email address is askjill@jillonmoney.com. We'll be right back.
401ks, IRAs, refinancing, she covers it all. Back to Jill on Money with Jill Schlesinger.
You're back. It's Jill on Money. If you've got a financial question, we'd love to hear from you. Our email address is askjill@jillonmoney.com, or you can just go onto our website. If you go there, you'll see all sorts of fun stuff. You can read, listen, watch, check out our resource section, which is really great. And you can also sign up for our free weekly newsletter. Very easy to do. So before we went to the break, Lara was asking about hiring a financial advisor, and it brought up two issues, and I got too close to the break. So let me explain. The first is that she went and talked to an advisor and who looked at her target date fund and said, "Wow, that target date fund looks like, you're 30 years old." And I want to remind everyone that target date funds, they usually, you have a year after. So let's say that she's 47 and her target date fund is, I'll make it up, right? We're in 22. She's probably in the 20, maybe it's the 2040 Fidelity Fund. Okay. And so it's the Fidelity funds are called Freedom Funds. And when you click on the Freedom 2040 Fund, what do you find? And I'm doing this right with you now. Okay. First of all, it's expensive as far as I'm concerned, but that's the least of it. The reason why this guy is saying, like, wow, this is a pretty aggressive fund is that inside of the Fidelity Freedom 2040 Fund, right? Because she's 47, she's going to retire in 20 years. Here's what the allocation is. It's 52% US stocks, 40% international stocks, 7% bonds, and 1% in short-term debt. So as you can imagine, she essentially has a 90% stock portfolio and a 10% bond debt portfolio, which is why that for year to date, this account is down 20%. Now, it's also why that over probably in 2019, she had a fantastic year. So, what are we to take from this? The first aspect of this question is that so many of these funds, these target date funds, are riskier than many of you might realize. And so that's why I really would suggest that you drill down and look at what's in these funds. Now, from Fidelity's perspective, the reason why they are trying to push out the risk is because they are saying, hey, you might retire when you're 65 or 70 years old, but it's got to last you for another 20 something years after that, or maybe 30 years. So what you really may want to do is, if you're worried about the risk inside of this fund, then you may choose a freedom fund with an earlier date. That's one way around it. The other way around it is, as you're doing, is you can talk to advisors. So I don't know how much money you have. And that's a big piece of this. So as you interview people, what I would suggest is go onto our website, jillonmoney.com, click on resources, and go about midway down the page and click on Need an Advisor. Here's 13 questions to ask. And so what I think you should do is read through this. And I have a lot of links to different places where you might find some help. Okay? But I think that's a great point, that often when we have these funds, these freedom funds, these target date funds, they do have some risk in there, Okay. Marilyn writes that an article that I said where I was talking about the direct payments from the government. And she writes, because of the virus, a lot of us haven't filed, or you suggested that once we file 2019, that's when we receive the government check, or is the government going to use the 2018? Government is going to use your 2018 return, and if any adjustments need to be made because of the 2019 return once it's filed, then they will make those adjustments, okay? And the question follow up here, Ellen wants to know if that stimulus check, will that impact my income? It's not taxable. So that's important. Okay. So no, it should not impact it's not a taxable event, should not impact you. And then let's see. A question from somebody who wants to know, If unemployment insurance from the federal government adds an extra $600 a week, who would want to return to work when this is coming in? Well, first of all, it's only for 4 months. And second of all, people want to work. I don't care who you are. People want to work. So it's not a disincentive. But anyway, thank you for your note. I'm glad that you've been a fan. I appreciate you being a fan. The government really had to do a broad calculation. And some people are going to find that that extra $600 a week is going to really be helpful. It's going to change their trajectories. Others are going to say it ain't enough. And it's just meant to be somewhere in between. Yeah, I know. Doesn't seem fair, but what are you going to do? Okay, Kurt writes, I'm 68 years old. I have my home paid off. I've got $4 million in CDs. I'm wondering where this money should be placed. Not necessarily to earn more interest, that would be nice, but to be safe in these trying times. Mark, $4 million in CDs. Pretty good, huh? Good for him is right. You should probably not have more than $250,000 in any one institution. That's how you make sure that you are covered by FDIC insurance. So if you want, you can go to depositaccounts.com and start searching around. But I don't think the banks are going to go broke, but that's the best practices, okay? Good luck. Congratulations on having $4 million in CDs. Okay, you're listening to Jill on Money. When we return, we'll finish up the program with more of your questions. During the break, please just go on over to jillonmoney.com and check out what's going on over there. Mark works hard on that website. Okay, we'll be right back. Okay, you are back. It's Jill on Money. And before we finish the program, I just want to remind you that we are here to help you out. And we also like a little break in the very serious news. I get that. So I just wanted to share with you a funny email that we received because I've been on television a lot. And what people don't realize is sometimes when I do, say, a Skype interview or a Zoom interview with somebody, people are seeing the back of my house, right? They're seeing the background. But when I'm on a lot of the shows, I'm actually in a studio that has a backdrop. And so people have been sending me notes like, oh my God, your house is so nice. I'm like, dude, that is like a fake background, but thanks. Marcia wanted to know, sorry to be off subject, what's the color of the walls that you were sitting in front of when you were being taped? Must be your living room or den. Beautiful. Perhaps a frivolous question, but it's the exact color I'm looking for. I think that's the backdrop color because the color in my house is, I think it's really white. I'm not sure. But anyway, I'll have to look that up. Okay, it is a little frivolous, but it was funny anyway. I just want to also remind everybody that during this time, we are usually very focused on your money, and we have to be. That's what I do. But I also wanted you to know that we have so many people who are reaching out to us who are really having a hard time. And I thought it might be helpful if I just recounted this. This was in the New York Times that I thought it was great. It was a note that if you wanted to donate money, remember the government is allowing you a $300 write-off above the line donations. United Nations Foundation and the Swiss Philanthropy Foundation have created the COVID-19 Solidarity Response. Centers for Disease Control and Prevention has a foundation and an emergency response fund. And Direct Relief made supply deliveries to the U.S., China, blah, 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 blah. So you know what? If you don't need the stimulus check and you want to give it away or you want to give $300 away, check that out. The UN Foundation and the Swiss Philanthropy Foundation, Centers for Disease Control. Okay, that's it. We have been broadcasting from the Policy Genius Studios, and we are here to help you all day long. If you want more of us, subscribe to our daily podcast. It's called Jill on Money. Otherwise, have a great week. Have a happy Easter if you are celebrating, and a happy Passover. We'll catch up with you soon. Stay safe.